What is going on, investors? Hopefully, guys are doing well out there. That is right. It is a Friday. The weekend is here, and we've got a major rally for all the FAANG stocks, and that means we're going to have a good time here on the FAANG Stock Recap Show, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. This week, we've got major layoff announcements at Google. We've got announcements at Microsoft. We've got new products from Apple, but we kick things off like we always do with Meta Platforms. Now, I am recording this at about 12:10 Pacific time, which means there's little less than an hour left in the trading day. By the time we get to the technical segment of the show, there'll probably be about 15-20 minutes left, so just keep that in mind as we're rolling through these prices. Meta started the week at 135, and like all these stocks are just melting up higher. This one up over 2.6% this week to finish the week very close to $140 per share. Microsoft, Meta, Google stand united to protect Section 230, which insulates a lot of these companies based on what's posted onto their platforms, as a Supreme Court looks like they're taking up a case that relates to a family of an American woman who died in an ISIS attack in 2015. They allege YouTube is to blame for the algorithm encouraging radicalization. So we'll see if there's any changes to this law or anything that the Supreme Court does to change this, and certainly would impact a lot of the content that you see not only here on YouTube, but across social media as well. WhatsApp was fined almost $6 million by an Ireland privacy regulator for breaching European Union laws. It also is giving WhatsApp and Meta just a couple of months to conform to other privacy and data aspects that it appears they're violating. Apple plans cheaper mixed reality headset, and they're postponing AR glasses. I will talk about this more when we get over to Apple, but obviously I wanted to throw this in here. The original rumor that we saw out of Apple was they were working on this headset that might have cost like $3,000, $4,000, $5,000. It's like a high-end headset. It looks like they're working on a price tag on a VR headset closer to $1,500, which certainly would impact Meta to a certain degree from a pricing standpoint. But if Apple is able to release this type of thing, well, at a lower price point, might actually get it in the hands of more people, which might play into the hands of the metaverse. Moving on to Apple, sort of the week at 134. Again, like all these stocks, just in rally mode, up over 2% this week. I finished the week very close to $138 per share. We got product announcements out of Apple this week, basically via a press release. They didn't do any kind of flashy showing off of these products. You got a new MacBook Pro, a Mac Mini, a new M2 Pro, and an M2 Max chips. I mean, these chips are phenomenal if you're doing video editing, if you're doing any kind of rendering or code. Highly recommended. I'm on kind of, I think, the M1 like Pro Max chip. I saw some of these benchmarks on these M2. I tell you what, if I had the money, I probably would just upgrade, but it would just be kind of a marginal gain for myself. But anybody that's on a much older laptop and doing that type of work probably will be in the market for these new products. We also got a new $299 HomePod, which is essentially a smart speaker, or really just a speaker. I mean, I guess people are using this to ask them questions and to play music, but it's really just a speaker. Now, I actually can endorse the $99 HomePod minis. Apple should be able to send me a check after this show, as I'm pumping their laptop and their HomePod devices. But look, I have two of these hooked up. They're actually playing in the background as my son is sitting back there on the couch watching a movie. He's able to listen to the movie with the speaker next to him, and I'm able to record this video. They are very, very nice if you want to spend the money on maybe a surround sound system for your living room. Apple plans cheaper mixed reality headset. We talked about this in the Facebook news segment, and they postponed the AR glasses. So it appears that Apple is working on a pair of glasses, and they haven't been able to work kind of the form factor down to where they don't look completely odd or ridiculous. Now, they are still saying that the Apple is going to release its first mixed reality headset later this year, but we've seen these rumors time and time again with Apple that they're going to release this, or they're going to release the car, or they're going to do this by this time. I would take all of these things with a little bit of a grain of salt until they actually happen, or until we get really clear images on what the product actually is. I actually would be shocked if Apple releases a mixed reality headset based on the demand that we've seen for these devices and also the use cases. Certainly they could launch something, but Apple doesn't typically launch something just to launch it. There has to be some relatively significant demand for the product, and I just don't know if it's there yet. maybe this company will prove me wrong. Apple fined $17 million by a Russian regulatory agency over market share abuse. I don't know if they have to pay this fine. They are not doing business any longer, it appears, in Russia, at least from an app store, and kind of shipping the phones into the country, obviously based on the conflict going on there. And I don't know if anyone would blame them if they just don't pay this fine. I don't know what Apple will do in that case. Moving on to Amazon. Start of the week at 97.40, basically flat. Went down a little bit, but kind of got back those gains. Amazon was in on an amazing run last week. I think the stock was up over 10%. So for it to take a breather before earnings, which I'll run down when we get to the technical segment of the show, we're on the doorstep of for all of these companies. Amazon pushed ahead with over 18,000. This number just gets bigger and bigger for Amazon. I think I saw 11,000, 12,000. Now we're up to 18,000 layoffs as recession fears are growing at the company. Their device and services segments, which builds Alexa's digital assistants and those Echo smart speakers. You also have jobs in the retail division and human resources over at Amazon. And my guess is they're not going to announce it at Amazon, but they're likely cutting back their larger workforce that works inside of the warehouses. But because you have so much churn at that, you have people kind of apply and they work for a couple months or a year or two, and then they go onto another job, or they go onto a full-time career or something. And they're using just Amazon while they're going to school, or just Amazon is kind of a part-time thing. My guess is they're probably letting some of that churn through as well. They're not going to announce that they're just slashing a lot of lower paid workers, but this is coming at the top of the mark, 18,000 employees. Amazon will boost Virginia presence and invest $35 billion in a new data center by 2040. This comes along with the creation of about 1,000 jobs in the state of Virginia, but also whenever you see these types of things, large tax subsidies and those types of things. Anytime these companies go into a state like Virginia, really anywhere outside of California or Washington, or where they have a large presence, when they go into these other states, it's often coupled with some really nice tax subsidies, which I think is beneficial, quite frankly, for everyone involved. OSHA, which is an occupational safety and health administration out here in the United States. And if you work in insurance or certainly any type of large labor organization, you're constantly having to comply with OSHA standards, whether it comes to safety standards, gloves, masks, all those types of things. It's basically the regulatory body on top of that. And now they found hazard alerts for 3 of Amazon's warehouses, and they're finding more. They found that Amazon warehouse workers would be at the high risk of lower back injuries, among other disorders and health deficiencies. This is why it's actually not the worst thing to start automating some of these job tasks, as they are actually hazardous to the workers' health. Moving on to Netflix. I should have said it at the top. We had Netflix earnings, although most of you probably have seen the video by now. If you haven't, check it out in our feed. We did, I believe, a 15-20 minute deep dive into Netflix's Q4 earnings, which were released after the bell yesterday. The stock started the week at about $324, dipped down as you had a little profit taking right before earnings. Don't blame anybody for that. But if you did, you missed out on today's over 7.5% rally to take the stock up to over $340 per share. Folks, that is an over 100% rise from the lows that we saw 7 or 8 months ago in Netflix. The company popped on that Q4 subscriber number, and analysts praising the financials and the content slate as well. Analysts and investors are largely shrugging off the fact that you had longtime CEO and founder Reed Hastings exit the company and go on to an executive chairman role, leaving the co-CEO role that he held for basically the life of the company. Moving on to NVIDIA, started the week at 173, ended the week, or is currently trading higher by 2.7%, including a massive 6.2% rally today. End of the week closer to $178 per share. NVIDIA is overvalued. Who the heck said this? Well, that's actually myself. So I'll have a link to this down in the description below. I think you're well aware of my thesis with NVIDIA, largely pointing to the fact that they do have these fantastic, there's no doubt about NVIDIA's products are fantastic. The management is fantastic. The stock has had great financial success and performance over the last really decade or so. But their new 4080 GPUs are being mocked by the industry for being too expensive. There's not a lot of demand for them from the gaming perspective because most people will just go with a cheaper chip or a cheaper GPU, and you're not seeing the demand come back on the crypto side as well. So we'll see what happens with NVIDIA, but just because the stock is overvalued doesn't necessarily mean it won't outperform or do well. I'm just thinking there's probably other sectors and other stocks that I'd rather pay up for. This one trading at 50 times forward earnings and 14 times sales. So I'm not exactly sure how much upside is left in NVIDIA. Applied Materials, though, NVIDIA and others benefit as Bank of America sees a, quote, soft landing for chips. Obviously, we saw TSM report their earnings last week. We should get more reads from Intel and AMD here very shortly. But Taiwan Semiconductor essentially saying that the first half of the year, you should see a correction and kind of softer demand, followed by the back half of the year, you see a resurgence in demand. Again, that remains to be seen. Moving on to Google, started the week at, we'll call that $90. End of the week up over 8%, including over 5.5% today. End of the week very close to $98 and some change. This is after the company decided to cut 12,000 jobs worldwide. So any of you that may leave snarky comments whenever I talk about people getting laid off and it being good for the company, I hope you're in Sundar Pichai's DMs right now, blasting him for cutting 12,000 jobs over at the company. But that sent the stock rocketing today. Now, very interesting news. This is coming from the New York Times. Google is calling in the big guns when it comes to this AI fight. We obviously have ChatGPT getting a lot of the press, getting a lot of the buzz as that rival chatbot has shaken Google out of its routine, with the founders who left the company 3 years ago re-engaging with more than 20 AI projects in the works. Now, I've been saying this here on the channel. Google has been buying AI companies for years. These chatbots are not particularly new phenomenon. In fact, you could go to IBM and set one of these things up yourself, which I did several years ago. Google has the capabilities, the marketing, everything to be doing anything that ChatGPT does and do it as well or maybe even potentially better. Problem with Google is Sundar Pichai seems like the guy, he's never has a hair out of place. He's never going to say anything controversial. He's not going to be aggressive. He's not going to be an Elon Musk. He's not going to be even a Sergey Brin or Larry Page. He's just not going to be it. And so having these two return to the company and re-engage with its AI projects, which should not only be in the works, but should be making it out to some kind of production and getting some media buzz and getting some traction out in the marketplace very, very soon. Because when we get to Microsoft, if Microsoft starts back open AI and starts backing that projects to where they don't have to put it behind a paywall, they don't have to layer advertising over it, they don't have to worry about making a profit, well, yeah, that is going to be a problem for Google at some point. But this company has been acquiring AI companies for a long period of time. They have the staff, they have the resources, they have the data, they have the technology. Nothing that OpenAI doing is anything revolutionary or even proprietary, and this company needs to get their act in gear. Otherwise, I'd get Sundar Pichai out of there as fast as they can and get somebody that can execute in. Moving on to Microsoft, start of the week at 237, up about 1% after being up over 3.5% today. End of the week closer to $240 per share. Microsoft also laying off about 10,000 employees, and they're going to take a $1.2 billion write-off charge in quarter number 2. So with all these layoffs that you're seeing with Google, Amazon, Microsoft, all of these companies report their earnings over the next 2 weeks or so. You're not going to necessarily see it then. You might not really even see the financial impact of it in the upcoming quarter as well, the quarter after this following quarter, because they're going to have to take these write-down charges. They have to do severances. They have to pay out benefits. They have to pay out PTO and all those types of things for tens of thousands of workers. So you really don't start seeing this until Q3, Q4, really, of this year. But obviously investors will front run that, and that is why most of these stocks are heading higher. Now, Microsoft rose as it starts to integrate ChatGPT with its Azure cloud. Now, here's the risk to Google. If you get Microsoft behind this thing and they're like, we don't care what the server costs are, because I guarantee you the server costs to run a ChatGPT are not insignificant, especially when you're a zero revenue, zero business model, no way to make money type of company. So if OpenAI is sitting out there on their own and they're just absorbing all these costs, burning through investor money, well, you can do that for a little while. But look, if you have Microsoft behind you, funding the server cost, allowing you not to run ads, or in some cases, Microsoft could layer on, and this is probably the reason why Microsoft is interested in it. Number one, it throws a shot at the bow over at Google, but number two, they have a big advertising business over at Microsoft too. They have a big subscription business, and it also gives Azure, their cloud product, maybe a competitive advantage over Amazon, maybe a competitive advantage over Google as well. We are going to see rapid development here. That's why I would not declare somebody a winner. I would not declare anybody a loser, especially if all the mega caps kind of put their tech behind this. At some point, it's going to be marketing and more about promotion. And in the past, that actually has been Google that's done the best job about that. Microsoft likely to receive an EU warning over its planned Activision deal. I think we talked about this last week. This was 4 days ago, and so I'm assuming this is a new story, but it's going to come out essentially with a charge sheet saying that we don't really like this deal, but if you give up some concessions and maybe some money, maybe we'll let it go through. We'll see how that works out for Microsoft. Moving on to Tesla, start of the week at we'll call that 126, up over 5%, including over 4.33% to finish the week very close to $133 per share. Tesla rallied this week as large investors got on Twitter and claimed that they were continuing to buy shares. I'd never trust anybody saying what they buy, not only on Twitter, but in the comments saying that they bought this, they bought that, they have this, they have that. Wouldn't really take any of it with a grain of salt, but look, Tesla did rally this week. Elon Musk faced another legal showdown over his taking Tesla private tweet. He did say at one time that he was going to take Tesla private, and funding was secure at the time at about $420 per share. That obviously turned out to maybe not be true or something to that effect. Now, Tesla engineers testify that a 2016 self-driving footage that the company presented, I believe it's still even on their website, and other materials that the company has disseminated, that it was actually faked, and that Elon Musk was basically directly involved with the footage essentially being faked. Sounds a lot like Nikola, but this time the company was able to fake it and then make it before regulators have really found out. Wyoming legislators are proposing a electric vehicle ban. This flies into the face of what you've seen out here in California, where I think they're putting a ban on gas vehicles by 2030. I tell you what, I have respect for any state doing what they think is right for their people. I certainly disagree, needless to say, with some of the things that get passed out here in California, but look, some of the stuff, maybe we can agree on. Elon Musk first interest payment on Twitter could be due this month. It appears that he has about $1.5 billion in annual just interest. It's not the expenses to run the company. It's just the interest on the loan. At some point, he has his first payment due this year, and so we'll see if that impacts if he has to sell some more stock or what he decides to do in order to come up with that payment, because it doesn't seem that Twitter is maybe generating that much free cash flow to where it can support that payment on its own. Tesla retail sales surged in China in January after it slashed its prices for its top-selling models. Average daily sales for Tesla in China during the January 9th to January 15th period jumped 76% year over year to over 12,000 vehicles in a week. Now, we saw similar type of things in Germany as the company cut prices on their vehicles. You're starting to see lead times go out. This is economics 101, like the first class. When you cut the price on something that actually has decent demand, well, the demand is probably going to go up. And when we look at Tesla's earnings next week, we're literally 5 days away from their earnings. We'll see if there's more commentary and how it impacted pricing, although these cuts are coming for the most recent quarter. We'll see how much profit Tesla continues to have, and maybe they could cut prices even further. Moving on to the technical segment of the show, kick it off with the S&P 500, which it's currently 12:30, so you still have 30 minutes left in the trading day. So if these things continue to melt up later on Friday, that is one of the reasons why maybe what we're looking at isn't completely up to date. But look, the trends are intact, okay? Both in the kind of, we'll call it longer term at this point, although the longer term trend with the S&P 500 is essentially straight up. But over the last, we'll call it the 12-month trend with the S&P 500, it's still intact. So you have this black line up here. This black line and this red line represents our downward channel. The S&P 500 is still in that. But we have what I would call maybe a micro trend represented by this green line, where you have some lows back here in October, followed by a series of higher lows back here in December, and we bounced off those levels. Now we need confirmation. Maybe it comes next week when you've got Microsoft earnings on the 24th. Maybe it comes when you got Tesla earnings on the 25th. The following week, you've got Google, Amazon, Apple, Meta, all reporting within a day of each other. You need a breakout above this channel to really, really prove that maybe what we have going on with the S&P 500 is the opposite of what we've had going on for the last 12 months, and that instead of a downward channel, we're starting an upper channel. Anytime you start an upper channel, you can buy the dip on these things, or you could be a little bit more aggressive on these types of things. Now, if you're like me and you've got a 20-year, 30-year, maybe if I'm in good health, maybe a 40-year time horizon on my stocks, I'm not trying to pick the absolute bottom. I'm just trying to buy them when everybody else is kind of exhausted from stocks. So I've been accumulating stocks over the back half of last year and even into this year, but understand that this longer term trend, or the 12-month trend, is still intact. So the likely scenario for the S&P 500, this is for all you cautious investors, your risk averse investors, or certainly anyone that needs this money in the shorter term. I would expect this market to get topped out somewhere in this range, get rejected, come back down to at least 3,600 on the S&P 500, a retest of the lows back in October, take you down to about 3,500. A retest of the bottom channel would really be a dramatic drop. You're talking down close to 3,400. That would be over 500-point drop on the S&P 500. We'll see what materializes over the next several quarters or so. Meta is just on fire, okay? Meta, again, very much like the S&P 500. So the 12-month trend is still in a downward channel. We've got kind of a purple and a green line representing that. There's some resistance up here at 157. It looks like if we do break out of this channel, that 157, this should be kind of a magnet for Meta shares as it pulls up to this zone. Complicating the situation is we've got earnings for Meta just around the corner on 2/1. So we're about 2 weeks away from this company reporting their earnings. Right now, we're setting up at the top of the channel. Will investors continue this momentum and bid it up over the next week or two heading into earnings? Seems unlikely, but I guess that's possible. But keep in mind that even if Meta fails at this level, there is kind of a shorter term uptrend to catch it on the way down. I said it last week, if you're in these markets for the shorter term, I'd probably be on vacation over the next couple of weeks, as these things could go one way or another. And it's really hard at this point to really identify which ways they could potentially go. Now, if they follow the trend, they are just going to pull back from these areas, likely heading into next week and the following week. That includes Apple, which found an area of support down here close to our purple line, but slightly above that at about $125 per share. It rallied relatively hard back up here to where the stock is now at 137. But we talked about how on last week's show, I think it was about halfway up. It was like it's going to meet this level at 137, which is the downward trend line and kind of some sideways consolidation with this one. It's going to take some really good earnings on February 2nd for Apple to really push up and above this. You push up and above, it still doesn't necessarily take you out of kind of the 12-month downtrend, but it certainly would take you out of this steep downtrend that Apple has been in. Now, if we get rejected at these levels, again, the area of support down here at 125 is there, and even lower than that at about 115 was where I'd be excited about Apple. Moving on to Amazon, it's in the green box from about $82 up to about $100 per share. People are accumulating and finding support for the shares in, it's a $20 trading range, but if you're a longer term investor, these are areas I think you want to accumulate a stock like this. It is still, though, again, all of these stocks, for the most part, other than Netflix, really, are in these kind of 12-month longer-term downtrends. Until you break out above that, you have to assume that this downtrend is intact. So again, risk-averse investors that need this money for a medical bill, college, all those types of things, I'd be out of these markets and earning 4% on some kind of essentially cash savings investment. Amazon reports their earnings on February 2nd. Now, speaking of earnings, we got those yesterday from Netflix. I tell you what, if the rest of these stocks act like Netflix, we'll be breaking out of our downtrend across the markets and all of these stocks, as this stock rallied basically 8%, and now it's peaking over. There is a little resistance, there's a lot of resistance for the stock, basically where it's at in kind of this 340 range. To get up over 340 and get into 350, 360, 380s seems like a tall task, but I tell you what, it seemed like a tall task several months ago when this stock was down here at about $160 to rally and fill this gap. That was a 108% increase, and that is exactly what the stock has done. So I tell you what, these stocks can go down very quickly, and they can rebound very quickly as well. Moving on to NVIDIA, looks pretty good. Looks pretty good from a technical perspective. I know I'm bearish on this from a fundamental perspective, but understand there's two segments of the program, okay? The technicals look fine to me, okay? Yes, we have this longer-term downtrend, but we've broken out of it. This is exactly what you want to see. You made some lows back here in October, higher set of lows back here, looks like in January, just a couple of weeks ago. Now, you would want this one to follow through. There were some highs that we made back in December. We'll just call it 190 on NVIDIA. You'd like for it to push up there. You'd like for it to push up back to this red line, which is resistance. You'd like to get up to 195. You get up to 195, even 200 on NVIDIA. Boy, that's a bullish sign. And I'd actually be really excited. I'm actually buy this one if it pulls back. From a technical perspective, looks pretty darn good actually over at NVIDIA. The risk though is if you do break this shorter term uptrend, a back test to support, back test to the channel lines is certainly in play. And obviously that is in play if you break out on the S&P or Meta or Amazon or Apple. A back test to that trend line is something that some technical people will be worried about. Moving on to Google, we talked about, I believe it was 2 weeks ago, we were sitting up here down at the bottom of the range, and we said, well, here's your spot with Google. It was about $86 per share, and we talked about how, well, if this technical pattern, it just continues to hold, you're going to walk back to the top of the range, and that's basically what has happened. Now, the positive news for Google is we made some lows back here in November at about $83. We made a higher set. It's not a dramatically higher, but it's a couple dollars higher here. So potentially, if this is the reversal area for Google, this is a very, very good sign. There's certainly some demand and support for the stock in that 85 plus or minus 5% or so in that $85 range with Google, as buyers have stepped in multiple times for that stock over an extended period of time, basically a quarter's time. Now, we are anticipating though that this stock will meet some resistance up here at about $100. If you are in this one for the shorter term, that is where you peel off, take some profits, those types of things if you're a shorter term trader. But understand that Google reports their earnings on February 2nd, along with Amazon and Apple. It'll be a very busy day here. We'll have to take care of our voice leading up to that, as we'll have lots of videos when it comes to the earnings side there. Moving on to Microsoft, it also very similar to Google, came down to the bottom of the channel. Now, this was back in October, went all the way back to the top of the channel. Okay, so this channel, basically, we've just kind of been chopping down it for really for 12 months or so with all these stocks. We were at the bottom of the channel. We came all the way to the top of it. So what we normally expect in this scenario is come back and retest lows. But actually what we did is we stopped short of that. And then we've bounced at this area. Now, what we're looking for, confirmation that this is the start of an uptrend, would be to get above about 252 on Microsoft. Now, the company reports their earnings next week, just 4 days from now on January 24th. So maybe you get some clarity there, but we need for this stock to get above 250. You get above 250, call it even like 255 on Microsoft, and it potentially you are starting a new uptrend on this stock, and this downtrend that we've been in for 12 months will finally be over. The more bearish news is you get bad report, bad guidance, bad whatever on Microsoft. And this was just simply just a temporary demand zone for the stock. And then we come back down here and maybe retest 213, lower than that, maybe 200. Those would be good buying opportunities, in my opinion, for Microsoft. We've been saying that for a while now. Moving on to Tesla, found some demand for this stock, and that is good, okay? Time you have these stocks that are falling off a cliff like this, you want to figure out where they find some demand right at $100 for Tesla, whether that's valuation, whether that's just a psychological level. People just didn't want it to go under $100. That's where you found some demand, and it bounced higher. Now, the problem with Tesla is very similar to Apple. You are running into two areas of resistance. You've got this red area of support, or was support in the past, now should be resistance right in kind of the 140. It's there. Okay. It's like 135 to like 145. Probably that you're looking at this consolidation of the stock back here. Again, between, we'll call it 130 up to, 150 or so. Tesla's a volatile stock. So when you draw these lines in, I would use them simply as reference. Okay. And then that's the case for all these stocks, but Tesla, not breaking any news here, can move very quickly up and down. And so it tends to blow past, like kind of on the downside, and blow past to the upside, which obviously, if you've been following the stock for any length of time, doesn't surprise you. On top of that, though, you've got this very steep downward channel, which again has to reverse, or more than likely has to reverse at some point. Whether or not it reverses at this area, we'll probably get some indications or some clues of that just 5 days from now on January 25th when Tesla reports. The other thing that you are seeing with Tesla is increasing volume on the stock. Anytime you have increasing volume and kind of a major sell-off and a reversal, typically a good sign, typically kind of a bullish sign, but we'll see what happens with Tesla just 5 days from now when they report their earnings. Buckle up your seatbelts, folks. We've got earnings over the next 2 weeks with all these companies, and we'll be here to cover it for you here on the channel. Hopefully you guys have a great weekend out there. Stay safe. We are pulling for the Cincinnati Bengals, and we are also pulling for the San Francisco 49ers, as I have season tickets, and I sold the game on Saturday for over $500 and made more money than I think I paid for the tickets all year. So I hope both of those teams win, or your favorite team comes out on top. Hopefully you guys have a great day. We'll see you again next week with Tesla and Microsoft earnings. Until then, good luck with your investments.